morning, AM Pat Chat covering FX. This is Bob Iacino along with Mike Arnold from Pat Trading Partners. Before I turn it over to Mike to show you what he is seeing on the charts, I want to quickly go over some of the things that came out late yesterday and overnight. Economic calendar first. We had Germany's gross domestic product come out at 1.7. The forecast was 1.7 and the previous was 1.7. So while it was not higher than expected, it's still showing a positive gross domestic product. The month over month was 0.4. That was also right in line with expectations for Germany's month over month GDP. Swiss industrial production came out at down 1.2, but it's not an industrial nation, so it's not very important. Jobless claims come out at 244,000 here in the U.S. They were expected at 240,000. Previous was 239. And the continuing claims came out at 2,060,000. They were expected at 2,065,000. Previous was 2,076,000. So the continuing claims dropping a little bit while the week-to-week number is up more than expected. We're also waiting on the house price purchase index, the quarter over quarter and the month over month. That'll be interesting within the context of yesterday's existing home sales, which showed a hot number up 3.3 in the U.S. versus 1.1 expected. We also had the FOMC minutes from February released, and the market pretty much perceived them as dovish. We're seeing dollar weakness across the board right now. The only real hawkish statement we saw was a statement that contained the words fairly soon in terms of rate hikes. A few participants saw an advantage to hiking at an upcoming meeting was another, I'm paraphrasing, but that was another phrase in the FOMC minutes. The rest of it still remained fairly balanced, and when you consider the preponderance of doves in this particular Federal Open Market Committee, the market is assuming that this is a dovish meeting. There are people out there saying that the March meeting is more in play after these minutes than it was before. But the Chicago Mercantile Exchange Group's Fed Tracker tool still has it at 17.7% in terms of the probability for a March rate hike. Let me turn it over to Mike so he can let you know what the charts are telling about a March rate hike.
Okay, thank you very much, Bob. So we had the euro yesterday reach down lower and then strongly reverse after the Fed minutes, and we're continued higher today. Euro's continued higher. That means weaker dollar. Trading right at a key level right now, 105.77. Next key levels higher, 106.01, and then 106.20 are what the areas I'm watching for. If we do turn back lower, we have 105.52. And we will potentially get this as a redrawn trend line. So let me just change that over real quick for you guys. All right, so that's what I'm watching for right now in the euro. In the pound, also moving higher. It did trigger the double as we've talked about. People are wondering where the stop levels are for that. The stop levels, if we close above 125.77 or if we trade anytime intraday through 126.09, that trade would be officially stopped out. I mean, we're pretty far away from that, so nothing to be concerned about right now. If it does continue higher, next major level, we have a key gain level and a significant level virtually on top of each other, which is about 125.22 to 125.26, and above there 125.72. If this does turn back lower, watch for a potential support around 124.36, followed by 124.18. Yen. See also that yen's getting stronger against the dollar. So we're trading right now. Key significant level 112.74. Continuing lower, we have 112.47, followed by 111.93 are the levels lower. If it does turn around and go higher, we have 113.36. Then I'd be looking at the 113.67 mark, followed by the 114.28. Swissy traded up. We were looking for a potential close above this defining point. Did not happen. We reacted pretty strongly there. Now we've turned lower. We're again testing this trend line on the other side. If we do turn higher, it's the 101.17 level is very key. Continuing lower, we have right where we're trading now, which is right around yesterday's lows, 100.77. Below that, we have 100.63, and then we have the rising R zone coming into play. So watch for that. Aussie, stronger against the dollar. See a key theme. We retested this key high from last week, which was 77.3150. We've already retested it. If we can get above there, watch for a retest of the 77.44 followed by 77.86 levels. Key support, we have this trend line and then near today's lows, which is right around the 76.60 mark. Finally, CAD, which is also strengthening versus the dollar. We ran up to some key gain levels, and now we've turned back down lower. We are watching for lower prices being around this rising trend line and the 130.47. There's not much. There's a lot of stopping points potentially also around the 130.69 level, 130.70 level, which we found some key support. And below there, the 130.47 level. Turning back higher, we have the 131.26, which will be resistance, followed by the 131.63 levels higher. That's all I have for you today, Bob. Back to you.
Thanks, Mike. Not sure if I mentioned it in the first section of the Path Chat, but the Royal Bank of Australia's Mark Carney is giving testimony to Parliament this afternoon. Should start around 6:30 Central Time, 7:30 Eastern Time, somewhere around there where you'll see comments starting to leak out. So Mike showed you the action on the Aussie dollar. It's gaining strength and has been gaining strength, and it will probably take a little bit of a hit if he's not as hawkish as the market expects it to be. Please subscribe to this channel. If you like these videos, hit the little subscribe button, and after you do, hit that little bell, which will allow YouTube to alert you when we have a new video out. These things are time sensitive, so the quicker you know, the better you're able to take advantage of the information. Also, click the like button and then visit us at pathtradingpartners.com. You can find a new Money Path podcast there, or you can type in the Money Path podcast in your iTunes search bar. Subscribe to that as well. Thanks for watching, guys. We'll talk to you soon.